So this is a very ad lib, fire hose information of what I learned at the Tony Robbins Platinum Partner Financial event. We're going to share this for 1 hour. I'm going to make this with real estate, but just all general finances. And for me, like if you guys can turn your monitors on, it really does get a lot more value for me to keep your eyeballs engaged. Now, if you're driving, that's understandable, but you know, I just like seeing people's eyeballs, and I would say I've learned a lot from Tony Robbins. He does a lot of these virtual events now, and he calls you out for not paying attention. I've definitely been called out a couple times. So here's what I'd like you guys to do. I'm gonna do this in 4 different parts. If you guys want to write this down based on how much time you have. The first part is I'm going to share what he teaches at Wealth Mastery. So a couple of you guys have heard this before, but a lot of you guys will not know what I'm talking about. And then I'm going to make it relatable to real estate investing. So that'll be the first 15 minutes. The second 15 minutes that I want to share is what the billionaires shared about financial freedom and such, because learning from billionaires is a lot different than learning from me. The third thing that I want to do is how I'm incorporating what I learned a couple weekends ago that you guys could apply to yourself. And then I'd like to do like the last 15 minutes of maybe just some Q&A, if that sounds okay with you guys. I don't want to just talk the whole time. I like kind of having a context. So with that being said, so Harry, Tate, Lynette, Gary, Kelly, Bruce, Sonny, Gabriel, Nick, Sean, love to see your eyeballs. Everyone else that I can see your eyeballs, thank you very much. So let me give a couple of examples with that, okay? So, and I like that people take notes. I'm going to share a little syntax with this info. So, oh, Nick Condi, we gotta check out your wife, not you, dude. Put it on your wife. All right, what's up? I see you. All right, so a couple things. Tony talks about 2 different buckets, if you guys want to write this down. One is called a safety bucket, and then the other one's called a risk bucket, okay? And before I never heard this before until I went to Wealth Mastery, where I met Derek. Oh, I actually met Derek, I think, at Date with Destiny 2018. Yep, now
yeah, that's correct.
Right? Yep, cool. I love it. And you guys can jump in and please make comments, okay? So I met Derek. He lives in Peru. Him and his wife, I think, own a shoe company and do modeling. His wife's like super Instagram popular. They have a new kid. But they talk about the wealth bucket and a risk bucket and then a dream bucket. So what I'd like you guys to do in this exercise, and this is the fourth time I've done this. So in this exercise, I want you guys to write down your basic like living expenses to the best of your ability, what your basic living expenses are, okay? So I'm going to share what your basic living expenses are. 1 is housing, 2 is food, 3 is like transportation, and 4 is utilities, right? So we would all agree for us to have some basic living expenses to live in the world these days. And I know I have some people that are from different parts of the world jumping on this call, which is awesome. I want you, to the best of your ability, if you're driving, don't write this down, okay? So that's good, Andrea. I'm talking to you too. But I want you to write down what are those basic needs that we have. So I'm going to share them one more time. So 1 is housing, 2 is food, 3 is utilities, and 4 is transportation, right? Like if you guys think about it, if you have those basic items in life, you're a lot farther than, you know, people in different parts of Latin America, different parts of the world. I would say Derek he did education, I think, in the United States, if I remember correctly. Like actually, Derek, you don't mind sharing, so now we're just making stuff up. What is the average family earning in Peru these days? Just curious.
Okay, so minimum wage right now is about, at the exchange rate, we're talking about $280 a month. That's minimum wage. And then you got all the rest still up.
All right, $280 a month. All right, most of you guys are making that more than that in a day, right? So If in Peru, that's the normal minimum wage, we're making some progress. Okay, cool. So what I'd like you guys to do is the goal for this exercise is identify those basic needs. Is how much are you earning that much in cash flow currently? So that's question number one. Coco, if you don't mind, I'm going to have you take notes for me if that's cool while you're eating. I'm going to have you take notes. You don't need to take notes. I'm going to pick Tana now because she has amazing hair like I do. So
Yeah.
Tana, I'm going to have you write notes with this if that's okay. So here's question number one. Whatever that monthly nut is that getting covered with your current cash flow right now? And when I mean cash flow, not working, like cash flow is in assets. Okay? So if you guys want to write in the Zoom chat bar, you don't need to tell us how much you're making. You just need to tell us what those passive income, good question, passive income. So for example, right now I could live and I could have my basic needs managed by my real estate portfolio. I'm just giving you guys an example or a preference, right? Just to kind of give an example. So are those basic needs getting covered by your current cash flow? So what I want you guys, first exercise, type in the Zoom chat bar what your basic needs are to live on them each month, and type that in the Zoom chat bar, please. So you're going to type what that monthly nut is. And the reason why I think this is a lot of times when we're like, oh my gosh, we got to make so much money, well, you start to identify what that much is, and they're like, oh, I need to course correct and I need to make some modifications in life, right? So basic needs with that is how much that money is. Okay, cool. You guys are all coming up with different things. Fantastic. Here's the next part. Now, you have the basic. You have housing, you have food, you have utilities, and you have transportation. Now, it's what you're spending half on clothing, half on entertainment, and half on auxiliary different items, right? So, and Tony shares this as an example of what you think a lot of people live like when they're retired that don't have a ton, right? So if you think about it, you're like, they live modestly, they have their bills covered, they can go on a vacation every once in a while, but I want to give this quick example of how much that money is. So we added a few things, a couple, maybe travel once a year, twice a year, right? Probably not going to Europe would be one, right? Some entertainment, like half of what you're spending on entertainment, right? So now I want you guys to add that in and determine this is how much my we'll call it second tier. What's your second tier of your monthly expenses? Just basic. If you guys want to type in the Zoom chat bar, please. This is my second tier monthly expenses. So Derek and Coco, I know, have gone to Wealth Mastery before. I'm probably butchering it, but I just want to think this is an important syntax for when you guys are wanting to do in real estate investing, that you kind of reevaluate with what you're doing. So if you guys can all type in the Zoom chat bar how much that monthly nut is, type in second tier, and then type the month in. So if you guys can write in second tier in the month. So Priscilla, while you're chatting with your husband, it looks like, or Jerry, or that was a good one, Priscilla. And Justin, love your beard. Okay, I'd love to see you with this. So here's what's cool. As you guys are writing that in, here's what's interesting. So as we think about this, now here's my next question. How many of you guys are having your second tier of monthly expenses getting covered based on cash flowing investments? Oh, that's good. I love it. Priscilla's she was at Wealth Mastery, so she's getting her book. Awesome. So how many of you guys are getting your current monthly second tier covered by your cash flowing assets? Good. We got Rhett is. Great job, Rhett. Tana is. That's great job, Tana. I'm curious on what type of assets you're getting. Real estate commissions I would not consider is that, if that makes sense. These are cash flowing assets like stocks, bonds, mutual funds, notes, crypto, Bitcoin, notes, real estate, REITs, those different things. Okay. Not me. Cool. John, always reinvesting cash flow. Not yet. Half. Okay, then no. Okay, cool. Good. I want to identify with what that looks like. So here's what I think is important as we think about this. So the first day and a half, Tony Robbins went over this with all the platinum partners even if we're going to go to Wealth Mastery the following week, like I did, and he really dialed in understanding your guys' numbers, right? So what I think is important is now I want you guys to establish, because I don't think we need to keep going with this part. We need to understand what are we going to do to build these assets, right? So if you guys want to think about it, what are you going to do to build these assets? So I'm going to have 3 different buckets. The first bucket is called the safety bucket. If you guys want to write this down, safety bucket. Safety bucket is normally viewed, actually here, let's see what you guys think is safe. Priscilla, do you have your notebook? Cool, I'm going to unmute yourself, please, and why don't you tell me what you remember or based on your notes is in the safety bucket real quick.
Well, people typically think of cash and bonds as in the safety bucket, but not necessarily with inflation and stuff, but whatever.
Sure, I would agree with that. Good. Do you remember anything else they shared in the safety bucket?
Well, there's treasury bills and then guaranteed investments type of thing.
Good. You guys all write that down? So those aren't very exciting things with the safety bucket, okay? So the purpose of identifying this is Tony teaches about in the book Money Mastering the Game, and then also Unshakable Asymmetrical Risk and Reward. And I'm going to cover this in a couple minutes for you guys, okay? Asymmetrical risk and reward, right? You have a lot higher upside than what the reward is versus the risk. And Paul Tudor Jones spoke about this a lot with cryptocurrency that I'll talk about the second half, okay? So we have safety bucket. I'm going to share this for you guys. Most of you guys are on here that I do recognize or I think I know. You guys are all interested in real estate or you probably wouldn't be jumping on this call, right? So me personally, real estate is considered a safety bucket to me, but for most people, real estate is not a safety bucket, right? So there was about 350 platinum partners on this 5-day event. And as they kept talking about real estate, like people are typing in like, Matt, what do you think? Blah, blah, blah. And I'm obviously I have an opinion. So I'm like, here's what I think. And I actually did a platinum partners call and I had 65 plats, literally, sounds like Tony Robbins, all throughout the world in 87 countries. Like, no BS. There's literally like 9 different countries. I'm like, some guy asked, what is a B-class property? And I'm like, well, where are you from? He's like, I'm from France. And I'm like, shit, okay, let me think. What's a B-class property in France is different than a B-class property in the U.S. or a B-class property in Peru, right? So I'm like, okay, in Amsterdam, like, because I've been to Amsterdam, like, the red light district is an A-class property, and the slums is a B-class. Like, oh, okay, I got it. We are all laughing, right? So the point of sharing this, let's go about risk bucket, okay? So I want to identify, I'm going to ask Priscilla in a second. She can look up risk bucket. I'm going to share a couple things with you with risk. Cryptocurrency and Bitcoin's absolutely risk bucket. Stocks, risk bucket. New developments, risk bucket. Hard money lending, risk bucket. Okay? REITs, risk bucket. Oil and gas, risk bucket. Gold and silver, safety bucket. I'm giving you guys a contrast, okay? Because a lot of times people are not day trading gold and silver. They normally buy it and they just let on it sit up for 1, 5, 10, 15 years, right? Different things to take into consideration. Priscilla, do you want to add in risk? Sorry, gold and silver is safety.
No, I thought you said safety. I think you said something about REITs or something.
Risk. Oh, okay. A REIT. Sorry, a real estate investment trust.
Okay.
REIT. Okay, cool. So you guys have this idea. So you have a safety bucket and then you have a risk bucket. So here's what I'd like you guys to do. Action item number 1. I want you to identify what percentage of your income are you going to invest no matter what every single month. And it's not necessarily in real estate, right? So action item number 1. What is the percentage of your income are you going to invest in something, right? So what is the percentage income Good. So what is the percentage of your income that you're going to invest? So for example, for me, I'm personally investing 30% of my net income into investments, okay? I'm taking 30% of my income and putting that into investments, okay? So I want you guys to type a Zoom chat bar of what you're going to do with investing. Good. So we have Rhett Scott 40%, Justin the one-upper 70%. Obviously, I'm good friends with Justin. That's why I called him the one-upper. Derek's 25. John, he's the one-upper plus one is 75%. Dave Ramsey's 15%. John must never have any fun. Kelly's 20%. Tana's 20. Priscilla's 20. Great. Whatever number that is, that's fantastic, right? So I want you guys to actually identify what is a number you're going to invest, okay? So let's see, Brad Boyce, Leslie Peterson, Sean, Katie Bullock, Josh Collins, Rafael Chavez, Tate Olivison. Sorry, I had to go to the second page. Bruce, I'd all love to see your guys' eyeballs. So I just have a Suga Mama to take care of me. Awesome. All right, good job, John. All right, so let's turn on these cameras so that I can keep picking on you. Thank you. Next part. So as you identify what percentage, I want you, now you're not going to share this with me, but I want you to write this down. What is the monthly income that you're actually going to invest? So all of you guys should be writing this down, and then we're going to identify what percentage is going to be risk and which percentage is going to be safety bucket, okay? So you don't need to tell me what that monthly amount is. You guys should all do at least 50 bucks. I think all of you guys that are on this call can probably do a lot more than 50 bucks, but let's at least start 50 bucks. So I want you guys to identify what is the percentage you're going to be investing in risk versus safety. So I'm going to let 30 seconds, and then I'm going to ask at least 3 people that have gone to Wealth Mastery to see what they say they're going to do. So what is the percentage you're going to do risk versus safety? So if you guys are driving, you don't need to put it in the Zoom chat bar. Do I have to do both? Yes, just for this exercise. What is the percentage you're going to do risk versus safety? So let's see. Derek, if you don't mind remembering, what did you write down, or as you're getting reacclimated being a new dad, what is the percentage you're doing risk versus safety?
Well, my risk right now is 20% and safety is 80%.
Okay, cool. Great. That's a great example.
That's in my position right now. Obviously, I'm not a risk taker right now since I have a kid.
Awesome. Sunny, tell your daughter hello. Awesome. Coco, do you mind sharing what's the percentage you wrote down with safety versus risk, please?
70% risk, 30% safety.
Awesome. That's fantastic. Priscilla, you wrote down 80% risk, 20% safety. Fantastic. Okay. So here's what's good with this. I'm deleveraging my real estate portfolio. I'm going to be less leverage. What I mean by that is I'm literally going to sell more of my real estate and reposition my assets into other asset classes. I personally feel I am too heavily invested in real estate. Doesn't mean I'm getting out of real estate, right? I'm just saying I'm personally deleveraging and selling that. And I will share more about that on my class on May 15th of how I'm analyzing that. But the purpose of this is I want to share with what you guys can do. So now a couple examples. I'm going to transition of what the billionaires said about a couple items, okay? So they said, if you guys have ever watched Ray Dalio, has anyone read Ray Dalio's book, Principles? If you have, type in the Zoom chat bar, yes, I have read Principles. Unless you're driving, I'm okay if you don't. Write it in the Zoom chat bar. But if you've read the book Principles, write it in the Zoom chat bar. Looks like I don't have one person that's read that book yet. Yes, Justin Puchar has. Fantastic. Harry Payne has. Fantastic. They have it in British English. I'm surprised. All right, cool. So that was for Harry. So with that, I would suggest you guys read that book to get a better idea from a multi-billionaire, just because here's the thing. When you have billions of dollars, your problems are way different than ours, right? Like just different. Ray Dalio is the author of Principles. So I'm going to give a couple synopsis based on what's happening in the market. He was one of the speakers. I'm going to focus on a couple of them. One, Hank Paulson. Hank Paulson was the Secretary Treasurer from 2006 to 2009 during the crisis, and he actually talked about what happened. I'm just going to share a couple things. He said, the crisis will shine a light on your weaknesses. The crisis will shine a light on your weaknesses. He also said the current bailout was politically toxic, but it provided to be successful. So I'm going to share a couple things what that means. Do you guys know that more than 25% of all the U.S. money has been printed in the last 12 months? Did you guys know that? We have so much money that's been printed in the U.S. There's a problem with that. Here's the problem. They just keep printing the money, and it's kind of devaluing our dollar. So some of the guys are actually using different currency, but they're still bidding on the U.S. dollar. With that, what happened with the TARP money, T-A-R-P, if you guys remember in 2008, versus the CARES Act, the government printed a bunch of money with the TARP to help try to get people to prevent foreclosing. The CARES Act, we got a bunch of money, the EIDL money, the PPP loans, right? We had a lot of different revenue streams. If you guys got money from the government, do hashtag say yes in the Zoom chat bar. Just doing something different. I did, definitely. Hashtag say yes. All right, cool. I definitely got some money. I got money the first time. The second time I didn't qualify because my income did not go down. Okay. So with that, a couple of things I think is also interesting. Another thing that is, we need to be competitive globally by having our money, like we need to know what we're doing with our money. So what does that mean? He also suggests to invest in emerging markets, like other parts of the world, to reclassify or re-leverage your money, because there's definitely different parts of the world that are doing really well. It's just important for you guys to look into that. Next part I want to share, Steve Forbes. So he had some very politically, like he was very pro-Trump, regardless if you like Trump or Biden. He's very pro-capitalist for politics here in the U.S. He thought that we should have a standard 17% tax across the board until you guys hit certain income brackets. So I just want to help you guys be aware of what's being taught or communicated. Not that that's super likely to happen. Here's another quote he shared. When you punish success, stocks get hit, and that means retirement accounts get hit, and that means everyone gets hit. So I'm going to say this one more time. When you punish success, stocks get hit, that means retirement accounts get hit, and everyone's get hit. So for those of you guys who are about to be retired, I'm going to say retired as in you're past 65. I don't see any silverbacks on this call right now. We got Sean with the silver beard. Besides that, what's up, Sean? Good to see your beard, buddy. But yeah, I don't see any silverbacks. Silverbacks are just older folks, which I respect. I think that's important that you got to work backwards, okay? So here's a great exercise on what that financial freedom needs to look like. And a lot of times if you guys jump on these calls that I teach frequently, you'll hear this. First thing is you'll take last year's income. If you guys want to write this down, last year's income times 25 equals the minimum you're going to need for financial freedom. So take last year's income, and if you're self-employed, you're going to want to say your adjusted gross income. And if you have your adjusted gross income times 25, that's how much you're going to need for at least some financial freedom. So one more time. So Katie, Josh Rowland, John Hong, Leslie Peterson, Bruce Hanson, Tate, Lynette, Nick, you're driving, Kelly, Justin, Andrea. They'll share it one more time. Take 25 times your income last year. You're going to need that for at least financial freedom. So cool example. Based on my income last year, I have more than 25% in that in assets. So I could choose to stop working, and I would just live off my assets. Does that make sense? I'm giving you guys just an example, okay? But I'd be super bored, and I wouldn't be teaching this class for free from 5:30 to 6:30. I'd be getting a massage probably. Okay, next part. One of the billionaires, second billionaire. So first one, Steve Forbes. Here's the second one. His name's Jeffrey Gundlach. The guy's super smart. Okay, so he said in the last 12 months, the government has officially declared that we've spent $7 trillion, but it's actually closer to 8.1 trillion based on the statistics that they're not sharing in his opinion. He gave a couple examples. He said lumber is up 262% nationally. That's freaking crazy. Crude oil is up 188% nationally. And then he said sugar is up 50%. What the hell? Who's eating more sugar these days, right? Like sugar canes, I guess. So here's what I think is interesting with that. So we've had a K-shaped economy recovery. I want you guys to Google this. Homework number 2. What is a K-shaped economic recovery? Okay, so it's a phases. The other thing that I thought was really interesting is he said the labor force has gotten so lazy because they've gotten so much money by not working. It's hard to, we have a shortage of skilled laborers right now. So the government has actually put us in a bind because people could hypothetically make more not working and they're just chilling, right? That makes sense? So I was talking to a friend earlier today. He's like, dude, I'm trying to hire 3 positions. This is really hard to hire, right? So different things. I do want to share this based on his asset allocation and investment principles. He said if he was rebalancing his portfolio right now, he would do 25% in real estate. If you guys want to write this down, he actually said 25% in gold and with a portion of Bitcoin as an insurance policy. He said 25% in stocks foreign, 10% in cash, and 15% in commodities you can invest using your ETF. That was his own personal opinion. This is what I would do right now, talking to the 340 people. He gave 4 book recommendations I'd like to share with you guys real quick. Book recommendation number 1 is The Dow Theory Essay. I'll type this in the Zoom chat bar for you guys. And I've never heard of any of these books. I'm going to read them because this guy's pretty smart. Dow Theory Essay, number 1. The second one is The Fourth Turning. The 5th one is Looking Backward. Sorry, that's the 3rd one. The 4th one is The Great Crash of 1929. Okay, can you repeat the percentages? You bet, Kelly. So let me go back. Are you guys good with this type of flow? Give me a thumbs up or a thumb down real quick. Give me a thumbs up or a thumbs down. All right, cool. So the percentages, Kelly, one more time, is 25% real estate, 25% gold with a portion of Bitcoin as an insurance policy, 25% in stocks, he said foreign, 10% in cash, and 15% commodities can invest using an ETF. This was Jeffrey Gunlock. All right, so while you guys are thinking, Cam, do you mind giving my water, please? I'm like super thirsty. All right. So I want you guys to, before we go, we got 30 more minutes. I want you to write down your top takeaway for a minute. Yeah, time to hydrate. Good job, Tana. Drink some water. What's your top takeaway thus far? And you're going to write down what you're going to implement for 30 seconds. Isn't that there? I don't know. I'm going to get some water. Okay, top takeaway, and what are you going to implement from here? Priscilla, this was Jeffrey Gunlock. Great question. So top takeaway, and what are you guys going to implement? Thank you very much. All right, next one. Ray Dalio's next. He said, we've spent 7 times the amount of money needed to respond to COVID. Okay, so he's like, we way overspent, which I think is really interesting. There's 2 types of inflation. The first one is called the cyclical inflation. The second one is called monetary inflation. And the reason I shared with you guys about Ray Dalio, he's really, really smart guy, very wealthy guy. And unfortunately, his son passed away last year, and he's reevaluated his life because his son unfortunately passed away kind of prematurely. He said the wealth gap is being fueled by technology, globalization, fiscal monetary policy, and the increased gap in education. The top 20% of income earners spend 5 times more on education than the bottom 80%. I'm going to say that one more time. The top 20% of income earners spend 5 times more on education than the bottom 80%. So here's a good example, right? Education is like what you're doing right now. We have people, well, at least one person international, which is awesome. Great job, Derek representing. So, you know, your education never stops, right? Going to different workshops, seminars, etc. He also said there's 3 factors to consider moving forward: technology, globalization, and the wealth gap between countries, and monetary policy benefiting those who have financial assets and not benefiting those who don't. So what does this mean to you guys, right? Well, you're like, well, Matt, this isn't really teaching me how to be rich. I will share a couple things. One, all of these guys are still students of life. Like they all talked about, the studying never stops, right? The studying never stops. Number 2, they're always reevaluating their assets, which I think is good that you guys are doing right now. And number 3, when you've just made it, you want to give back because that's what it's all about, right? So a lot of these individuals are giving back. So Ray Dalio did say this: cash is the worst investment right now due to inflation. He said cash is trash. We're losing 2% a year to buying power, which is subtle right now, but will accelerate. Okay, so what does it mean by cash is trash? You can obviously invest in other currencies. I'm not going to tell you which ones to do or not do, but here's me personally. I'm actually reallocating my portfolio to have at least 10% of my total assets in cash, where right now I don't. I have a ton of equity. So that's what I'm just personally doing for the next 12 months. But because I think it's, if we have an economic challenge more than we have had in the last 12 months, you know, you guys have heard the comment, cash is king, right? So having cash is a big deal, okay? So there's Ray Dalio. He said the holy grail of investing, hold on, Tana, real quick. The holy grail of investing, then I'll answer Tana, then I'll go to the next person. 1, you have 3 uncorrelated investments. You'll reduce your risk by 50%. So I'm just going to say hypothetically, let's say Rhett Dean, and I don't know this, I'm just going to pick. Let's say 80% of his real estate, 80% of his assets is real estate, and let's say 10% of it's Bitcoin. I'm just making up stuff, right, Rhett? I don't know. And let's say the other 10% is in the stocks. Well, if he only has 3, then he has a high risk that he can lose a lot, right? But if you have 15 uncorrelated assets, will reduce your risk by 80% while improving your return to risk by a factor of 5. So here's a quick example, then I'll go with you, Tana. I'm going to have you guys name as many asset classes you guys can think of. What I'd like you to do is, this is what I love about Zoom. I've been on this so much. Go to the, give me a thumbs up if you have an asset, and then I'll unmute you. We'll tell you to share it, and then Tana's going to write them down. Is that okay, Tana? So if you can think of an asset class real quick, raise your hand or give me a thumbs up, and I'm going to share. Okay, Priscilla, can you share one real quick? Go ahead, please.
Real estate.
Real estate. Okay, that's one. Fantastic. Who else has one? Raise your hand, please. Rhett, go ahead, please. Unmute yourself.
Stocks.
Stocks. Cool. We got 2. Besides Rhett and Priscilla, who else has an asset class? Go ahead, Miss White. If you don't mind unmuting yourself with your amazing hair.
That would help, wouldn't it? Precious metals.
Precious metals. Fantastic. That's another one. Who else has another asset besides those 3? Go ahead, Gabriel Roberts. Unmute yourself, please.
Yeah, I was going to say bonds.
Bonds. Great. So besides real estate, bonds, stocks, and precious metals, what else can you guys think of? Raise your hand, please. Tana, go ahead, please.
Bitcoin.
Bitcoin. Can we call it crypto? Let's call it crypto / Bitcoin. Good. What else do we have, guys? Ladies and gentlemen? Come on, we got a bunch of people on here. No one else can think of something else? Rhett, go ahead, please.
How about businesses?
Businesses, okay? So you could be venture capitalists, or you could do crowdfunding. I'm good with that. Great job. Harry Payne, go ahead, please.
Treasury notes.
Treasury notes. British treasury notes or American treasury notes? Depends on which one you want, right?
Always the US dollar.
Oh, the US dollar. Look at that. Okay, what else can you guys think of?
How about commodities? How about commodities like oil and gas?
Good. Good. Oil and gas. Fantastic. What else can we think of? Gabriel, go ahead.
Yeah, I guess. I mean, this was kind of a joke, but I was thinking about lumber, just with the way prices are going up. So.
Okay, so we'll pick that with commodities, right?
Yep. Just going along with that. So.
Good. Tana, how many do we have written down?
9.
Unmute yourself, please.
8.
9? 8. Okay, Harry Payne, what do you got, buddy?
Future contracts.
Future contracts. Good. Okay, I'm going to give you guys 5 more if you guys want to. Go ahead, Christine.
Collectibles, the Beanie Babies.
Collectibles. Yep, good. Not Beanie Babies, but collectibles. All right, good. Okay, I'm going to give you guys 5 more. A real estate investment trust is different than regular real estate. Okay. Notes, they actually talked about lending money. Notes would be considered different because you're in the cash flow position, right? Notes is 1. Option trading is 1. It's risky, but it's 1. Whole cash value life insurance is 1.
Whole what?
Right? Cash value, I'll just say cash value life insurance. Cash value life insurance. Angel investing is 1. Like I was talking to someone today, they have $100,000 in a hard money note, and they want to sell the note, and they want to invest in a company. Okay, they're like, I can make 12% of my money, but I want to make 100%. I'm like, well, that's pretty aggressive, but good for you. Okay, so you guys kind of get the idea. Go ahead, please.
Did you say angel?
An angel investor.
Okay.
So there's a friend of mine named Naveen Thakur. He's coaching me right now as a CEO coach. He has a Harvard MBA, went to Princeton. I'm going to probably be teaching a class with him in September this year on raising capital that we'll announce in the next week or 2. That will be pretty amazing. But I think he told me about a book called 0 to 1. If you guys want to write down the book, 0 to Run by Peter Thiel. Peter Thiel is a current billionaire. He started PayPal, give you a point of reference. Naveen is friends with Peter Thiel. It's kind of cool, right? So I'm one person separated from being friends with a billionaire guy. So you never know who you're going to hang out with, right? I'm from Midvale. That was for Andrea and for Sean. All right, next part. So Paul Tudor Jones, we got 19 more minutes, okay? So Paul Tudor Jones said the top lessons from last year is from adversity comes opportunity. I love that one. From adversity comes opportunity. He also shares a 5-to-1 rule of asymmetric risk reward. Can I risk $1 to make 5? And you can be wrong 80% of the time and still be up 20%. That's pretty sick, right? So different ways to invest and to level up your game. Trend is your friend. So I'm going to share this real quick. Your job is to own the top 10%, the top 10 performing stocks in the world this year. A great rule for me is always trade with a trend, and I define the trend as the 200-day moving average. If you don't own stock that's above the 200-day moving average of its closing prices, then you've got something that's a downward tilt. You want to get out of there. And in the long term, you want to attach yourself to a rocket ship. I'm going to say this one more time because everyone said this guy is super on point with trading, okay? Trend is your friend. Your job is to own the top 10 performing stocks in the world this year. A great rule for me has always been trade with the trend, and I define the trend as a 200-day moving average. If you don't own a stock that's above the 200-day moving average of its closing prices, then you've got something that's a downward tilt. You want to get out of there. In the long term, you want to attach yourself to a rocket ship. It's a lot of information, right? So here's what I would do with that information. I would talk to your financial planner and find out what you're currently investing in, right? And then as you determine what you're investing in, ask what the 200 moving average has been, and you want to have your top 10 stocks be based on that. He also said you want to own real hard assets. He was really about real estate. He said a lot will be spent in real estate and suburbanization of America and associated land. That's a great long-term investment. It's still the early days, okay? And one more thing I want to share, I'll share with Bitcoin, and then we'll kind of talk about this. Paul has been invested in Bitcoins for a year. Key concepts is rumors or rules, okay? Rumors or rules. Bitcoin is an immutable rule. If you look at the world today, this is sick. There are $346 trillion worth of stocks and credit financial assets. $346 trillion of stocks and credit financial assets. There's 60 trillion worth of cash and gold. There's 60 trillion worth of cash. Gold is just over 10 trillion, and Bitcoin is 1.2 trillion. Paul thinks within 50 years we could do away with cash and we could all move to Bitcoin. So, just something to think about. Gabriel, are you under 30 years old by chance? Yep. All right, cool. So when you're in your 70s or 80s, if you have some Bitcoin now, when we're all somewhere else in the universe, you'd be like, man, I was really glad I was on that call in 2021, right? So Bitcoins, here it is. That's just his opinion. Doesn't mean it's true, okay? Paul's asset allocation, then I'll go to the next billionaire. Paul's asset allocation in this environment, right? This is important. He said, in this environment, 20% would be real estate. 30 to 35% would be in equities across different currencies. 20% commodities, so you can throw your lumber in there. 20% Bitcoin, that's a ton, right? In his opinion, 20% Bitcoin and a minimal amount, less than 5% in rainy day cash with zero credit. That's his opinion. So you guys can take whatever information you would like from here. All right, here's the Bitcoin baller, okay? This guy's all about Bitcoin. If you guys kind of think about this, we just did some basic fundamentals, right? Safety versus risk. Hopefully that gave you guys some really good ideas. So safety versus risk. The second thing is we're talking about how much cash flow you have. It looks like one or two of you guys have enough in assets. Don't worry, Nick, you're doing a great job. You're buying a house, right? And then the third thing is we just kind of verified what billionaires are saying. So I'll say Michael Saylor. So often called digital gold, but while gold loses half of its value over 30 years due to mining, he says Bitcoin is immortal. The brilliance of Bitcoin is that you can't copyright, can't patent, and anyone in the world has access to it. Money is a monetary energy. Bitcoin is a monetary energy network. I'm going to say that one more time. Money is a monetary energy, right? Like, what do you guys do most days? You wake up and you go work to earn money and do other things. Raj, tell your wife hello. And then if you think about it, Bitcoin is a monetary energy network. That's his opinion, just wanting to share with it. He shared currencies are collapsing, not just in the U.S. He just said in his opinion. Currencies are collapsing and all investors are in search of a store of value. So the thing he likes about Bitcoin is it's been around so long that it has an established track record. They're not day trading Bitcoin. They're just buying it and letting it go up, if that makes sense. So different things to take into consideration. Economic technology, I want to share this and we'll move on to the next person. So he said, economic is imperative. The road to serfdom is working exponentially harder for a currency growing exponentially weaker. Okay, economic imperative. Moral imperative. 1.5 billion people in the developing world whose currencies are going to zero. They have zero purchasing power or chance of livelihood. Literally, a matter of life or death puts the power back in the hands of the mobile device. He's like, due to technology, there's people all throughout the world that have smartphones that are able to communicate, and that it's really enhancing technology, right? And then he said, technology imperative. It's the internet of money, more powerful than FANG combined. You guys know what FANG is? F-A-A-N-G. Anyone know what FANG is? Okay, Facebook, Amazon, I forgot the other A, Netflix, and Google, right? Think about all these different things that have changed.
The other A, I think it's Alibaba.
Oh, Alibaba, thank you. Facebook, Amazon, Alibaba, Netflix, and Google. That could be it, not sure, but it sounds good. All right? So he's like, those are huge, huge markets, right? Huge, huge markets. The last thing I wanted to share is addressing volatility. I think this is important for you guys. So people shouldn't fear volatility. Volatility is the measure of change of an asset. Volatility is not the risk. Sometimes volatility is not even bad. Example, think of Tony Robbins, right? What has Tony Robbins done in the last year? He's totally evolved with his presentations. Actually, has anyone ever gone, if you've gone to a Tony Robbins event, type in the Zoom chat bar which ones you've gone to, just real quick. If you've gone to a Tony Robbins event, in the Zoom chat bar, type which ones you've gone to. Just curious. And those guys who haven't, why don't you see what other people have attended? So if you've gone to a Tony Robbins event, type in the Zoom chat bar which event you've gone to. All right, Priscilla. Wow, Priscilla. Date with Destiny, UPW, Business Mastery 1, Wealth Mastery, Life Mastery. Kelly, awesome, UPW. Sean, UPW. Andrea, good, UPW. Justin, UPW, Business Mastery 1, Business Mastery 2. Derek, UPW, Wealth Mastery, Life Mastery, Business Mastery 1 and 2, Date with Destiny, awesome. Coco, UPW twice, Life and Wealth Mastery, Business Mastery 1, Date with Destiny. Cool. So I think you guys might want to go to UPW virtually in June. It's only $400. It's for 4 days. You guys want to write that one down? Rafael Chavez would really help you out, I think, with a couple ideas. Not that you need any help because you have a master's degree and wore tights in college, if you know what I'm saying. I think he laughed at that one. So, Kristen, UPW, Business Mastery 1, Leadership. Good. So, he shared Tony Robbins, LeBron James, and Tom Brady, right? So, Tom Brady, great example, went to the Tampa Bay Buccaneers and freaking won the Super Bowl. Like, how amazing is that at 42 years young, right? Like, Patriots, you're done. That guy just keeps evolving. LeBron James keeps evolving, right? So I think it's important to think about these different things. Last thing with Bitcoin, regulation. Bitcoin is not classified as a currency, but as a property. It has a store value. Bitcoin is going to have 250 million people by the end of the year, 1 billion people within 5 years, and 5 billion people by the end of the decade. You can't stop the wave. So that's his opinion based on Bitcoin. So knowing we have 9 minutes left, I'm going to think of a couple people to help you with Bitcoin. There's a gentleman named Bill Barhit. He is the founder of the Abra app. So if you guys want to Google that on your own, the Abra app, you're able to buy and sell and keep money through Bitcoin like that way. I don't understand it super well, so I'd rather just give you the referral and you guys do your due diligence. I will say this, I was introduced to Bitcoin 5 years ago at a real estate mastermind, and at the time you could buy a coin for like $6,000. I'm not saying I wish I would have, but you know, I definitely had the $6,000 at the time burning a hole in my pocket, and you know, it's worth a lot more now. So I'll type it in for you guys, Tana. So it's Bill Barhit. height. There we go. He has a TED Talk about Bitcoin that he did 12 years ago. And Priscilla is introduced to it at 12K. It's pretty good. It's kind of like the investment of Mastery University. All right, cool. So what I want to share with him, one other person, Eric Prince. Eric Prince is like a former Navy SEAL. He's a former Navy SEAL. He just talks about there's different things happening in the world that could totally shut down the U.S. or the world. He did talk about the coronavirus last year, that he talked about how it could make a huge impact with what happened, and he was pretty correct. But I think here's at the end of the day, as we think about what to do from here financially, how we take what we're learning and implementing it, I just want to keep the last 7 minutes for open Q&A for you guys. So let's open that up, or your top takeaway, whatever you guys would prefer. So if you guys don't mind, raise your hand real quick. I'll just pick on you. Hopefully you guys got a lot of information. If you guys want to take 30 seconds and review your notes of what you learned, or if you guys want to ask a quick question, I can answer or cover something. Go ahead, Rhett.
You said you're going to get rid of some real estate.
Justin, mute
Is that
yourself.
mostly just because you feel like you're too heavily weighted, or you want to pull some cash, put it on the sidelines? What's your thought there?
Okay, go ahead. Ask the question again. Is this that bad?
Oh yeah, it was noisy. You said you're going to start liquidating some of your real estate assets. Is that because you're concerned you're too heavily weighted, or you just want some cash, or
both?
Is it something else? Both.
Both.
Okay.
Yeah. So quick numbers. If I own 87 doors now, right? If I have 87 doors, and on average each door is worth $250,000,
right.
There gives you an example of what my total assets are. But the return on the assets is super low. I'm running like 5% right now. So I want to re-leverage and reposition all the equity that I have so I can buy better assets moving forward. So if that makes sense. The second thing real quick, and then I'll go Tana next. The second thing is I want more cash so I can play in a different game, because last market correction, I didn't have a lot of cash. I maybe had like $125,000 at the time. So I'm actually working on getting between 1.5 and 2.2 million, because I can do a lot of stuff and earn a good rate of return temporarily where most people are not. So that's something I'm doing. Great question. Tana, go ahead, please.
So Ray Dalio said cash is trash, and then right after that you said cash is king. So I got a little, so talk to me.
Conflicted information.
Yeah.
So here's the cool thing. I'm sharing two different people's opinions. So the normal thing, all of you guys have heard cash is king, right? Here's the point. He's talking about cash as an investment, right? So he doesn't love having cash as an investment. I'm talking about, when Red asked me my question, I'm talking about having cash so I could actually buy more assets. Because right now I just have a ton of equity. Like, my balance sheets is super impressive based on how much equity I have, or impressive to some people, but I'd rather have cash so I can reposition more assets.
Cash to invest.
Great question. You got it. Cash to invest. You got it. Good. Who else has some more questions? Go ahead, Derek.
Matt, you mentioned something about real estate, but it wasn't the real estate like an asset, but the notes or something like that? Or what was it?
Notes. Yeah, notes. So you can lend, a lot of times you can lend money. So a great question. There's a gentleman that was on the Platt call for me last week. He has 65 notes. So what he'll do is he'll go buy real estate, and then he'll fix it up, and then he'll sell the property, and he'll actually sell it on an installment sale. So he receives the monthly cash flow instead of being the landlord. And once he sells that, then when he wants his money, he'll sell that note to a different investor, and he gets cash. That's a very underutilized investment strategy in our market. And I honestly think it's underutilized in our market because most people could be contract for deed, or it's an installment sell, right? It's just most people don't even know what I just said. So it's more of a sophisticated builder method, if that makes sense. After you've owning a bunch of portfolio, you would do that. So great question.
Thank you.
We'll do a couple more. You're welcome. Thank you. Yes, Justin, go ahead, please.
My question is, when you look at it, diversification within the real estate platform, how are you viewing, or what was your idea on, apartments versus single family versus commercial versus some of that other types of things versus different locational type investments as well?
Awesome. That was like 3 questions in one. So great question. So what I'll do first part is I'm selling all my single family residencies in the next 24 months, except for my first rental. I'll share. Now, this doesn't mean you guys need to. I'm just sharing. I've owned a lot of properties for like 12 to 15 years that I bought 2006, right? 2006, I bought 13 houses. So they're at like 25% loan to value. So I think there's 3 calculations to go over. If you guys see in this, I'm going to cover a lot on how I analyze my portfolio in my class on May 15th, which is an all-day class. I would strongly, if you guys own 1 or 2 rentals, I would strongly encourage you to go. But here's what I look at. What is my value? What's my gross revenue? What is my depreciation on the property? If you guys want to write this down, what's the depreciation? What is the mortgage balance? And what is the interest rate? So those are 5 quick things that I look at as I evaluate my portfolio every year. And I'll go over it way more in depth in May. The second question, if I was buying properties right now, single family, what's up, Nick? I would buy 4-bedroom, 2-bath, newer than 1970. So if I was going to buy properties right now, which I totally suggest people that are newer to buy, I'd buy 4-bedroom, 2-bath, newer than 1970. The next part is I totally am paying attention of what's happening nationally with which states are more pro-landlord versus which ones are more pro-tenant. And then I'm also looking at what the appreciation has been since 1991, the last 5 years, and what the future economic growth will be. So those are all the different things I'm looking at with my portfolio. John, did any of those platinum partners discuss the economic impact of pending baby boomers in the next 5 to 10 years? Yep, awesome. Great question. And I'll end with this. They said more assisted living facilities are going to be needed because baby boomers are living longer than they planned, and they don't have enough in assets to live the quality of life they're looking for. So I'm actually interested in selling some of my properties and buying some assisted living facilities because people are living longer than before. And I think for you guys, what you need in assets will need to continue to grow, and you just start where you are now to where you want to go. So great question, John. So Jerry, Christine, Kelly, Bruce, Tate, Josh, John, Tana, Sonny, Harry, Sean, Nick and his wife, Justin, Andrea, Derek, Raphael, Gabriel, Rhett, Coco, and Priscilla. Thank you for jumping on this call. Here's what I'd love for you guys to do if you're not registered. The next workshop is on Saturday, April 15th. It's how to build a real estate portfolio from A to Z. I'm going to go over more on analyzing our portfolio, what we're doing to manage our property managers, how we're handling COVID challenges right now. There's a lot of people that are not getting paid right now. And then what's more important is how to take advantage or provide opportunities for you to buy properties from other people who have cash flow problems. So it's going to be focused on real estate investing as renting properties. I'm not going to talk about like fixing and flipping or wholesaling. I'm going to talk about like how you guys can buy these types of properties. So all of my properties are in Utah, between Davis and Salt Lake and Utah County. So great. So I appreciate your guys' time. Hopefully this was here's what you guys can do. Go on a Facebook. I love Facebook because I'm over 40. Go to Facebook and just do a chat. Do a post. Like here, I'm gonna take a photo right now. Do a post, or go to Instagram and share like what you guys like. And on May 4th, I'm gonna do this photo real quick. But on May 4th, I do classes every single month. It's on the first Tuesday of the month. Smile. It's going to be May the 4th be with you. I'm literally going to be flying back from a concert. I'm going to a zoo. If you guys like zoo music. I'm going to Red Rock in Colorado on Monday night. I'm going to a concert with my wife and a couple friends. I'm literally going to fly back, come to the office, teach my free class for 2 hours. Like, that's the cool thing about life, is we can create the life that we want if we're willing to put the work in and surround ourselves with people that are doing a little more than us. So thank you for your time for tonight. Hopefully you guys will go to the class on the 15th or do this virtual one. This will be live at my office on the 4th. You'll need to register. We could have up to 50 people, and you can also do it via virtual if you like. So hope you guys earn more, serve more, do more, become more, and do more. Wealth for West Side. Hope you guys have a great day. Thank you very much. Derek, good to see you guys. See everyone else. Thanks. Tana, thanks for making notes. See you guys. Bye-bye.